Well, we've spoken so much about banks, right? But real estate is another area where markets have bid up stock prices on the back of expectation that this will, at the margin, maybe, help demand a little bit more. Shishir Baijal is Chairman and Managing Director at Knight Frank India. Shishir, good morning. Great to have you with us here on the program. Thanks very much. Prashant, this side. So how does one think about this? Will this, this will help people with EMIs, etc. But a rate cut, will it really spur demand, end-use demand, in your opinion, Shishir?
I think it would. I think the banks front-loading the rate cut to a 50 basis point cut is a substantial move. It's far higher than the 25 basis point cut that the market had anticipated. And I think this front-loading and the transmission of this to EMIs will most definitely help the affordability, and it will definitely boost the residential segment. Primarily, the one segment that will really help will be the affordable, or if I would say close to the 50 lakhs to 1 crore segment. If you look at the residential change that's happened since the pandemic, during the pandemic time, this segment used to have close to 45% share of the market. And that time, the market used to have close to 160,000 units a year. I'm talking about 2020. The market's gone up to 350,000 units a year, while this segment was languishing and the share came down to 25%. So our feeling is that these rate cuts would really have a meaningful impact in this segment. And I do hope with the transmission that's going, the affordability picks up and the demand for housing picks up in this segment, which perhaps has the largest segment of demand in our country.
Shishir, great to have you on. Thanks for joining in. Rate cut, liquidity and pricing, we've rarely seen a connection, right? Especially in super hot markets like Mumbai, pricing is a different beast altogether. But, take us through some of those recent trends as well, because there's been some evidence, or at least some chatter, about, a lot of inventory building up. Some concern on, if you leave aside the marquee transactions, say in Mumbai, which is sort of the big bulge bracket transactions that have happened, where the registrations are showing some signs of a slowdown. Could this just be an interim patch, or is there some concern building up, particularly in some of the top residential markets, NCR or Mumbai?
I think you'll have to have a look at it, because by looking at it just on unsold inventory or the inventory building up may not be perhaps the full answer. If you look at the velocity of sales, if you look at the age of inventory, I think they are all fairly healthy. In fact, perhaps at the healthiest level for a long, long time that we've analyzed. So in most of the cases, the length of unsold inventory is less than 8 quarters at the max, which is fairly healthy. The issue really is in the lower segments. I think whilst there has been a plateauing of the numbers in the higher segments, but there is still substantial traction there, as we have seen even in the Mumbai segment. The above 5 crore is still showing a robust growth. The little plateauing of the growth is really in the medium and in the less than 50 lakhs.
Yeah, because those registrations, I'm talking Mumbai particularly, I mean, that really made big headlines, right? Because registrations had fallen 4% in May. Which is why the question, and this is a sub 5 crore market that we're talking about.
Right.
Is this just a small blip, or would you read anything more into it?
We'll have to look into this. It's very, very early days for a month's data to come in. But if you look at it the same month, the total revenue collected by the exchequer was higher, and that's fundamentally based on the higher segments. So our ardent wish really is on this front loading of the 50 basis points and the transmission that many of the banks have given for the EMIs, that this will boost the demand of the segments under 50 lakhs and 1 crore. And I think that's where the major potential lies in demand.
Yeah,
as well as for developers to come into it and for supply to increase within this segment.
Yeah, we've had listed developers, we speak to regularly on quarterly earnings. Some of them have moved away from that segment to more premium because that's where the demand has been booming. But maybe this will revitalize that segment once again. Sanjay Dutt is also with us of Tata Realty and MD and CEO of Tata Realty and Infrastructure. Sanjay, good morning. Great to have you with us here. Prashant this side. Just give us a quick sense of your kind of lay of land as far as Tata Realty goes. How much is commercial? How much is residential at Tata Realty?
So we have over 10 million square feet of commercial, which is built and leased, and about 20 million is under design and development. And roughly 13 million square feet under residential across major markets is under design and development again. So I would say nearly 50-50 portfolio. At one time, we were predominantly residential, but now it's a very balanced portfolio.
Okay. And on the residential side, how does, which segment are you mostly present in? As Shishir was talking about, I mean, focus is under 50 lakhs. That's where it makes most impact in that sense. From Tata Realty's perspective, how does this play out?
So last 5 or 6 years, our strategy has been to focus on key metros, the top 5 or 6 cities. And as a result of that, because it's a very urban focused strategy, we are in the more premier and mid segment and select few luxury segment. There was a time when we were in affordable, but over the last 5 or 6 years, we have changed a bit of strategy and focused more on urban growth.
Sure. Mr. Dutt, that's why the question, hi, good morning, Surabhi here, and that's why the question, and we started asking Shishir about exactly this.
Yeah.
How closely linked are interest rate cuts to real estate demand in this, a mid-premium to slightly more premium housing segment? Because for affordable, one can understand every 1,000 rupees saved in a home loan EMI matters. But when you're talking about mid to higher end premium housing, then isn't it more closely linked to, say, the wealth effect from the stock market or job security, the bonuses that you're getting? Do interest rates really matter when it comes to the affluent housing segment? Mr. Dutt?
So, one take is, of course, from the consumer point of view, lower EMIs, it does matter because you can actually upgrade yourself from a very compact 3-bedroom to a normal 3-bedroom or a slightly better amenity and quality development. At all segments, it does matter. And I think if you look at it from the developer's angles point of view, the cost of capital, which has been an issue, the cost of construction, which has been rising, and the land cost, which has gone up, any relief by the government and interest rate does make a difference. And therefore, it makes the whole sector overall healthier.
Premium segments will be, as you said, I think the impact, point taken there, but I think it's also interest rates, lower interest rates, higher stock prices, higher
feel-good
gains.
Factor, yeah.
Not feel-good, real factor.
So the higher the Nifty goes, the higher the demand for premium real estate, right?
Bigger capital gains and that's been, of course, the prime driver, stock market gains, at least in big cities like Mumbai, etc. Thank you very much, Shishir and Sanjay, for joining us. Short conversation, but I think useful to put the context straight as far as the RBI cut goes.